makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, auto stocks in Europe have been hit hardest in today's sell-off after the U.S. president followed through on threats to impose tariffs on China, Canada, and Mexico. Well, Stellantis and Volkswagen amongst the automakers hardest hit, with car parts maker Valeo and Daimler Trucks also sliding. Well, still with us now, Rosalind Matheson, Bloomberg's EMEA News Director, and Charlotte Ryland, Head of Investment at CCLA Investment Management. So thank you both for joining us. Ros, I mean, I guess the tariffs seem to be more all-encompassing. I mean, the reason why the markets have been taking it so bad is that there's a bit of chaos out there. They're higher than expected in certain cases and across the board.
Well, that's right. So they are quite broad and they really show intent. But the interesting thing is that markets do seem to be tempering a little bit this morning. Is that a sense that maybe, just maybe, with a window to go, that Trump can be persuaded to change his mind? We know that he's having calls today with the leaders of Canada and Mexico, and there seems to be a little bit of hope that maybe there's some wiggle room baked in here. I mean, again, it does seem that Trump is quite determined to push ahead, and now he's opening the door also to the EU, although he seems to be giving the UK a pass this time around for some reason. So he's quite determined, it seems, to go ahead. But markets are maybe thinking, can we shape this a little bit so it's not as all-encompassing from the outset? Can we go gradually? Can we be a bit more targeted on certain things? And you can see a lot of concern about the unintended consequences of these actions, the knock-on effects. So if you're a company, a European company, for example, you've got plants and operations in Mexico, how does that impact you, for example? Do you have to try and push some of your operations to the US, and then do you get hit anyway? So there's a lot of kind of what now going on, really, frankly, in the markets with companies and also with political figures around the world today.
Yeah, Charlotte, I mean, this what now? And we're seeing, like, a lot of the European markets getting slammed. Where do you see the biggest point of tension? I know car makers are down between 5 and 6% in Europe.
Yeah, I mean, I think as anybody who has got, fairly rigid supply chains, so car makers, there's somebody who struggles with pricing power anyway. It's a very competitive industry, so if you have got increased costs, that's a problem. Luxury is another sort of obvious area because, you can't move your production if you make it in France or Italy. That's part of your brand cachet, you can't move it. Or equally, something like, the spirits companies, again, you have to make those things in Mexico if it's tequila, etc. And so, I think for those guys, it's clearly more of a problem.
Charlotte, I mean, none of this should be a surprise to markets. Was it because they were expecting too good news, or they were expecting Donald Trump to actually try and find a deal? I've always been told, look, just take him at face value. What he says, he usually does.
Yeah, I mean, I suppose everybody's sort of looking back to his last term when he said a lot, but actually what he did was quite targeted. He had quite a lot of people around him who were probably a bit more conventional. This time he's surrounded with loyalists. He does seem to be being a lot more aggressive, and we're probably underestimating what he actually wants to push through this time.
I mean, does he want Canada retaliating by saying, look, we'll put 25%? Does that make a difference to the US?
Well, it seems like Canada's come out quite hard in response. We've already said that they're going to retaliate what's more than $100 billion US, but they are also, Canada's been quite targeted in what they're going to come at in terms of the products, and they're really leaving a lot of the tricky stuff off the table. And obviously for the US, that's things particularly around the energy space, for example. And so they are, again, they're saying, we are ready, we've got this plan, and we're going to do it, but they're leaving that room again for negotiation, and that is really the key. Is there anything they can do at this point to try and shave this down, at least for now, when it comes to Donald Trump? The point was just being made. He is surrounded by loyalist hardliners. Now, Marco Rubio has been really pushing this, and he's been in, Latin America in the last couple of days and really driving this in Trump's inner circle. Can Scott Bessent, try and somehow get this to be a more gradualist approach? Again, it's who is in Trump's ear and who's going to win out in the minute.
I mean, what Marco Rubio did in Panama is actually quite interesting because he got a little bit of leeway, right, from the Panama leadership.
Well, that's right. So Panama is an interesting case because you've got a leader who's been quite firm and quite strong. When you look at Greenland, which is also in Trump's crosshairs, you've got Denmark really grappling with what to do and how to respond and seemingly quite anxious about it and not knowing quite how to do it, going very quiet. Does that work? Coming at Trump, does that work? Not really. Panama has been quite firm, but also saying, look, we will do this. We can allow perhaps some preferential, treatment for US naval ships, for example. You can see, again, Canada and Mexico saying, hey, look at all the things we're doing when it comes to just trying to stop fentanyl. Yeah. Here's all the examples of what we're doing on the border. Is that going to be enough, though?
Yeah, and Charlie, I mean, the same for the EU. Is there anything that the EU can do to try and temper it, or does the market take a view that actually the tariffs are coming? And is the UK now a good play if they're exempt?
Yeah, I mean, I suppose, if the UK genuinely does get away with it and say, look, we haven't got a big trade deficit with you, you can actually, we're in a better place from that perspective. But, if this is across the board is what he's going for, then I don't really see how the EU completely escapes.
So what does it mean for markets in the EU? Will that be priced in now, or do they wait until he actually announces something on the EU?
Yeah, I mean, I suppose that this is the trouble with, you were saying with companies as well. It's like that huge uncertainty as to actually how long does this last? What does it actually mean in reality? He isn't he doesn't have complete control as president. He does have to get some of these things, not necessarily through Congress, but through the sort of mechanisms of the US government, and maybe it won't be quite as easy to put everything through. So I think there is still that sort of degree of uncertainty, but generally you'd have thought it's going to be pretty bad news for costs in terms of businesses.
Roz, there's also the story of Elon Musk, who's basically, in charge. It's not an official position, but he's in charge of cost cutting at essentially the US government. And there's quite a lot of things that he came out with in terms of Doge. And then he's also giving a speech with Jamie Dimon to reassure investors on Treasury. So how does that all work out?
Well, he doesn't have an official role, but he's got an office in the White House, and he seems to be having a lot of levers into government here. I mean, he's saying that he wants access to a lot of very sensitive information in the Treasury around payments because he wants to see what they're doing, where money is going. He's also said that around US aid, which he clearly wants to completely denude at this point. And so his officials, if you want to call them that, in Doge seem to be able to get all into different forms of government. And what does that mean for payment systems when it comes to Treasury? Are they able to do something in an arbitrary way around payments and cut certain things off? And you can see the bond market saying, well, hang on, what does that mean in terms of, we appreciate the idea to reduce, spending. That's good. Cut regulation, good. However, if some of these payments get arbitrarily cut off in the wrong way, is the US going to miss payments it should be making or payments coming in? What does that mean not just for financial markets, but also for the fiscal picture? So there's a lot of unknowns there. You can see that Elon Musk is saying, I'll talk to Jamie Dimon and reassure you that this is going to be good for the bond market. But again, back to that question of unknown unknowns. We just don't know what that's going to look like.
Yeah, and Charlie, it just means a lot more uncertainty, right? For Treasuries, are you buying Treasuries at the moment, or it just looks a bit too iffy?
Yeah, I mean, I suppose the debate you've got with Treasuries is, on one hand, is there inflationary pressure from tariffs? Yes, there is. But is there going to be slower growth, in which case you'd probably be more favourable towards Treasuries? So, at the moment, it's sort of a delicate balance, yeah.
OK, thank you both for joining us. Charlotte Ryland, Head of Investments at CCLA Investment Management, and Roz Matheson. Now, coming up, UniCredit has acquired a 4.1% stake in Generali, adding to a flurry of deal-making in the Italian financial sector. We'll be speaking to the company's Chief Executive Officer, Philippe, Donnet, for an exclusive interview next. This is Bloomberg. Welcome back, everyone. UniCredit has acquired a 4.1% stake in insurance giant Generali, another surprise move by the bank's chief executive, Andrea Orcel. Now, Generali has become an important asset also in the complex web of deal-making in Italian finance over the past few months. Last week, Generali also announced a new strategic plan with plans to return more than 7 billion euros in dividends by 2027. Now, the company's chief executive, Philippe Donnet, joins us for an exclusive conversation. Monsieur Donnet, thank you so much for joining us today. I mean, there is really quite a lot going on. UniCredit has made this surprise move in the fight to dominate the Italian financial system. Were you aware that they would do that, and what's your reading of the situation?
Good morning, Francine. As you said last week, on Thursday, we presented our strategic plan, which seems to be very convincing. The market has reacted quite well. We've been doing well in the past few years, delivering since 2016 300% total shareholder return. This new plan is very promising, a lot of shareholder remuneration. So I'm not surprised that institutional investors have appetite to join us.
Were you informed of the purchase?
I learned it from the press. I had no special information.
Do you understand what the end game is of UniCredit right now?
Once again, my understanding is that it's a financial investment because UniCredit, as many other institutional investors, has a strong appetite for the kind of return we're going to deliver in the next few years.
So there hasn't been any consideration that they want to take you over?
No other special consideration.
Mr. Donnet, talk to me about the pillars in which you plan to return the amount of money that you've promised last Thursday. Where will you grow and through how?
Well, this plan is focused on excellence. The name of the plan is Lifetime Partner 27, Driving Excellence. So we're going to be excellent in everything we do, excellent in the relationship with the customers, thanks to our great distribution. Excellence in our core capabilities. It means excellence in the management of our insurance business and excellence in the asset management. And then excellence in our operating model. We want to embed artificial intelligence to take all the benefits of the new technologies, to do better what we are doing, to do more at a lower cost. So at the end, this very strong, solid, robust plan will deliver a superior return for shareholders and for all stakeholders.
In your plan, I think you could have 1 billion to 1.5 billion also in possible M&A. I know you want to go through excellence and growing organically, but could you look at possible M&A opportunities if they arise?
Well, the first focus of the plan is obviously execution, quality of execution. We've been very proactive in the past few years in M&A. We acquired last year Liberty Seguros and Koning, so we are very much focused on the integration of Liberty Seguros, of the combination between Generali and Koning. As you know, we announced a merger between the creation of a new company to a new asset management company with Natixis Investment Managers, Generali Investment Holdings and Natixis Investment Managers will create a huge European platform, the European champion of the asset management, managing 1,900 billion euros. With a strong multi-affiliate platform, including in the US. As you can imagine, we need to be focused on the execution of this integration. So this will be the first focus. After that, we will be opportunistic. As you know, we also committed to 1.5 billion euro of shares buyback in the next 3 years. We will benchmark any M&A opportunity against share buyback. We will be opportunistic, but once again, the priorities of this plan are execution, delivering excellence, and delivering superior shareholder return.
I have so many questions. So opportunistic, is there a specific market where you could find an opportunity, or is it just depends on whether it's a good deal?
We are opportunistic. Obviously, we would be happy to further strengthen our franchise in Europe. We are already a leading insurance group in Europe, but if we can find good opportunities, we would look at them. And, you know, it's good to be the leader in Europe, but it's not necessarily good to be only in Europe. As you know, we are growing also a lot in Asia. We would also look at opportunities in Asia if they are good, and if they are good enough compared to the share buyback.
Mr. Donnet, for Natixis, how are the talks going? What are the major hurdles right now?
Now, we signed a memorandum of understanding, and the next step, of course, will be the signing of the contract, and then the closing. We expect to close the deal, the transaction, early 2026. And of course, between now and the closing, we will go through all the relevant regulatory approvals processes.
Do you think the Italian government will give it its blessing? I know there's talk about them being nervous, also about French influence in the Italian banking system or insurance system, and they have the golden power. What's your view on all of this?
I think now the deal has been announced and presented. We will have significant time to explain, to inform, to answer any questions people can have on the deal. Definitely, the new co is very balanced in terms of governance because it's a 50-50 new company, so with equal rights in the governance. The CEO of the new company will be the CEO of Koning and Generali Investment Holdings for the next 5 years and probably the next 10 years. It's very important to understand something that maybe has not been understood very well in Italy. There is a big difference between who is the asset manager and who is the asset owner. Right. Obviously, the asset owner will remain the insurance companies, including the Italian insurance companies, who will have the full decision power on the allocation of the assets. And then we will control and manage, we will co-control and manage the new company.
So you seem pretty positive on that front. Now, in Italy, Monte dei Paschi is also bidding for your biggest investor, Mediobanca, which puts you kind of, in as a player or in the middle of this battle between also billionaires in Italy. What's your view on what happens next, and how will that impact and change Generali?
Well, Francine, as you can imagine, I'm not the right person to comment this takeover bid. The only thing I can say is that the market reaction has not been really positive, has been skeptical about the industrial and strategic rationale of this offer, and the reaction of the market speaks for itself.
Can you tell us about, if it were to go ahead, does it change Generali, or do you think Generali will be more or less preserved?
Nobody knows what's going to happen, and I will not comment on speculations.
Your mandate expires in the spring, but you're ready to stay.
The mandate of the whole board of directors expires at the next shareholders meeting, and as we announced last week, I'm available for next mandate, because I would be happy and honored to have the opportunity to implement this new this new exciting strategic plan for the next 3 years, together with my team. We have delivered great results in the past 9 years, and I think that we would be, all of us, excited to continue and deliver this return to all stakeholders.
Monsieur Donnet, thank you so much for joining us today. That was Philippe Donnet, the Chief Executive Officer of Generali. Plenty more to come. This is Bloomberg.
First, I want to speak directly to Americans, our closest friends and neighbors. This is a choice that, yes, will harm Canadians, but beyond that, it will have real consequences for you, the American people.
Well, that was the outgoing Canadian Prime Minister, Justin Trudeau, responding to U.S. tariffs. Now, other key stories this hour: Panama has promised free passage for U.S. warships through the Panama Canal and said it will withdraw from China's signature lending program. This comes after Secretary of State Marco Rubio blasted the government during his visit over the weekend, calling Beijing's influence in the region unacceptable. Now, it's very clear that oil is rising as Trump has slapped a lot of these tariffs on the biggest crude supplier to the U.S. If you look at futures, they're also down, and you can see, for example, S&P futures down some 1.5%. Coming up, Donald Trump kicks off a trade war with tariffs on Canada, Mexico, and China. We'll discuss the geopolitical and economic consequences next. This is Bloomberg. good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Global stocks fall, the dollar surges after President Trump threatens to upend global trade with tariffs on Canada, Mexico, and China. Canada and Mexico vowed to hit back with countermeasures. Beijing is reportedly preparing a U.S. trade proposal to avoid further tariffs. And the euro slides as Donald Trump says the EU is next, threatening tariffs, quote, pretty soon. So after weeks of threats, Trump's tariffs are due to take effect in less than 24 hours. It's the most extensive act of protectionism taken by a U.S. president in almost a century. It swings a wrecking ball through the alliance between the U.S., Canada and Mexico. Well, with us in the studio is Leslie Vinjamuri, director of the U.S. and the Americas program at Chatham House. Leslie, thank you so much for joining us. We'll be joined by Brendan Murray in a second also to go through some of the trade chaos. But what's the right approach right now to deal with Trump tariffs? Is he still trying to get a deal, or does he just want to come out winner at any cost?
Well, first of all, we don't know. It certainly, a couple of things. First of all, the tariffs right now are the ask is vague, but it seems to be the case that what Donald Trump is saying in the case of Canada is that he wants that border to be secure. The tariffs will be lifted when the fentanyl problem is dealt with. And we know there's very little fentanyl coming across that U.S. northern border with Canada. In fact, underlying it, there is a significant bilateral trade deficit that the U.S. carries. Canada has a surplus, so maybe that really is the motivating factor. But the different thing this time is that there's so many things that Donald Trump is attaching to those tariffs, controlling migration, fentanyl, the list keeps getting longer. So it's hard to know quite what to ask for. But the second really interesting thing here is that Canadians, Mexicans, Europeans, people seem to be converging on a view that the best response to Donald Trump is to retaliate, A, and B, to retaliate with very targeted tariffs against constituencies within the U.S. that, buy things, people who buy things and people who like Donald Trump, with the idea that, this will lead to political pressure on Republicans to reverse those tariffs. None of these things are very well tested. There were a few instances of them in the first administration. My own view, especially with Canada and Mexico, two countries that are very, especially Canada, such a close ally and partner of the United States across multiple years and multiple issues. But I think the fact that Canada is, much weaker, obviously, puts it on the back foot. And my fear is that the decision to retaliate, while understandable, is more likely to lead to further escalation. So we'll see. Yeah. There are talks today. Yeah. The tariffs come into place tomorrow. Maybe there will be a deal, but I suspect that we are in a very, very risky scenario right now if Canada retaliates.
Leslie, let's also bring in Brendan Murray, who leads Bloomberg's global trade coverage. So, Brendan, first of all, this is kind of like a wrecking ball, at the Americas, and this is what we're leading with this morning. But it's also the fact that Canada, for example, is going quite hard back. Right. So how does it actually trending? For the moment, it's talk, and it's I'll do this, you'll do this, and $100 billion. But actually, what does this trade war look like? Yeah,
exactly. So as Leslie was saying, there's a whole lot of uncertainty about what could happen in the next 24 hours. It doesn't sound like they're talking in any way that they're close to a deal to be had at the 11th hour, and there's no off ramp. What are the metrics by which Mexico and Canada can reach to meet what Donald Trump is asking for, and so there's just this big cloud of uncertainty about the damage. Some estimates that we've seen is the hit to the average American family of four is going to be over $3,000, a one-time hit from the 25% tariffs.
Brendan, how quickly does that come?
It would come within the first couple of weeks. Right. These aren't phased in. Companies, as we've seen in their earnings transcripts, are they're going to pass these costs along. So and those go to the American consumer.
Leslie, is there a thinking amongst heads of states, especially Canada, that say, look, by retaliating, it just sows even more chaos in the economy, so the stock market reacts, and that's when Donald Trump takes notice?
Yeah, look, there maybe. I mean, I think your logic is right that there is a consolidation of views in Canada, and remember, they are facing an election, so there is also a domestic game in Canada that who is going to be tougher on Donald Trump. That's not just playing to the United States; it's playing to a very unsettled domestic question about the next leader of Canada. But again, that convergence, yes, that the pressure leads Donald Trump to back down because it leads to chaos, potentially inflation, high costs for American families, as Brendan has said. But the second thing is that this is really hitting public opinion across Canada. Canadians are becoming very nationalist as a result of Donald Trump's tariffs. They are fully supportive of a strong response. And, we have our associate fellow, Roland Paris, former advisor to the Prime Minister Trudeau, is saying that Canadians are now attributing this not only to Donald Trump, but they're really blaming America. This is really shifting how Canadians view the most important relationship that they've had over many decades. So there is a concern, even beyond these tariffs, of what this does to the broader relationship and how long that effect lasts.
Brendan, we're starting to have, some of the analysis that Bloomberg does best saying, look, these Trump tariffs risk some 1.2% U.S. GDP hit and a boost to PCE by 0.7%. So that changes everything in terms of interest rates and what the Fed can also do. Who's next? The EU, I guess, is also getting prepared.
Yeah, and Donald Trump said so last night, Sunday night, told reporters that when they asked him, when is the EU going to be off the hook here because you haven't gone after them specifically yet? And he said, no, they're next. And so you've got the European Union officials yesterday put out a statement saying, we want to negotiate. We'd like to, we want to stay on an even keel with this relationship, but we'll retaliate if we have to. So it will be interesting to see. And I think the Canadian politician recently said, we should really band together. Europe, Canada, Mexico, band together and show a united front against Trump in these instances. It will be interesting to see if any of that kind of materializes and whether Trump, can feel the pressure from, not just one or two allies, but, a half a dozen or more.
And Leslie, are you surprised at the pace at which these are coming? We always knew that it was quick, but gosh, we're only 2 weeks in from the presidency into the, inauguration was exactly 2 weeks ago.
Francine, I am surprised. None of us should be surprised, but it is, he said he's doing what he said he would do, and everybody says he does what he said he would do, but it's the tariffs. It's the rapid at-pace move to stop foreign assistance with a few exceptions only, to shut down diversity, equity, and inclusion, to basically get rid of civil servants across the U.S. government that are on the quote-unquote woke side of the agenda. They've shut down the USAID website, now saying that they're going to get rid of the agency or at least fold it into the State Department. So the domestic agenda, the tariffs, they're moving very quickly and with full force to implement. On this question of Europe preparing to retaliate, my concern is that, Europe's in a very, very precarious position, not only with respect to its own domestic economy, stalled growth, but on this broader question of Ukraine. And if President Trump faces, a Europe that's strong, united, and retaliates, there is the risk that he links this to America's security assistance, its support for Europe, for Ukraine, that it factors into his vision of what kind of deal, on what kind of terms, and the costs to Europe could be extremely high. So retaliation seems right. There's a certain logic and intuition, but it's very dangerous. And we risk right now getting into an escalation, an escalatory pattern of retaliatory tariffs. And it's very hard to see where the ceiling is on that. Again, we hope that the markets and inflation are the guardrails for President Trump, but there's no evidence yet to confirm everybody's instinct on that.
Yep. Brenda, I mean, I know there's a belief amongst European, leaders saying that there are no winners in trade wars. I mean, obviously Donald Trump thinks otherwise. Otherwise, he wouldn't go ahead and do it. And if you have a full-on trade war between the U.S. and Europe, what does it mean for China? Could they be, at the end of the day, benefiting from all of this?
Well, China is the beneficiary of a lot of these, trade fights that Trump is instigating. China, in the meantime, is going around to Latin America, to Africa, and building alliances for building up its own trade network. So while the U.S. is in a lot of ways breaking down those relationships, China sees an opportunity and goes in and tries to build them. You see it flare up with Trump's comments about wanting to take control of the Panama Canal. That China has a beachhead there with its shipping assets, and so this is the game that's being played. Larry Summers said on social media last night that this tariff war is a gift to Xi Jinping, and we'll see how that plays out if it actually is. But on the early read, it sounds like China will only take advantage of these as opportunities.
And Leslie, it seems that the UK for the moment is actually spared tariffs. Is that because the two get along, or is it just on numbers? Look, the trade deficit is not as big.
Yeah, it does seem this way. Donald Trump has come out and, he said, I think it was yesterday, Europe's in a tough position. Maybe the UK will be different. He's hedging on the UK. I think that Peter Mandelson, the incoming UK ambassador to the United States, deeply expert on trade, has been working this relationship. Karen Pierce was very successful, the outgoing British ambassador in engaging with Donald Trump. Keir Starmer's worked this relationship. And, the numbers are different. And Donald Trump has, an exceptionally low tolerance for the European Union. He was happy to see Brexit. The UK is better positioned potentially with respect to questions of regulation. There could even be one hates to even say the words quietly, but there is some prospect for a different kind of trade deal, possibly. So I do think the UK is better positioned. But again, be careful what you wish for and be careful what you say, because things can change on a dime.
Leslie, thank you so much. Leslie Vinjamuri, the director of the U.S. and the Americas program at Chatham House, and our very own Brendan Murray. Now, coming up, oil advances as President Trump slaps hefty tariffs on crude from Canada and Mexico. We'll discuss the market impact with Nakhle, the CEO and founder of Crystol Energy. That's next, and this is Bloomberg. Well, oil higher today as U.S. President Donald Trump placed hefty tariffs on a range of imports, including crude from Canada and Mexico. Now, the move threatened increasing costs for American consumers. We're now joined by Nakhle, the founder and chief executive of Crystol Energy. Carol, thank you so much for joining us. First of all, give us a sense of how some of these tariffs you think will impact oil in the longer term. Again, Canada has a huge oil reserve, especially with the sands, that will impact the price in general.
Good morning. Well, let me start perhaps with the immediate reaction of markets, and we saw already an uptick in oil prices because we're talking here about Canada, which is the fourth biggest oil producer in the world after the U.S., Saudi Arabia and Russia, and more than 90% of its oil exports go to the U.S. So Canada has not really diversified its oil market because, anyway, they looked at North America as an integrated market they were hit by this steep tariff. Though we have to see that the impact of 10% is not as 25% on the Canadian oil, but still any activity that can curtail or can put a limit on energy flows create a fear of potential disruptions. And this is where we're seeing this kind of uptick on oil prices, especially as probably local consumers, local customers, local refiners try to look for alternatives to Canadian oil, cheaper alternatives. They would be looking for immediately for local production, and that explains the uptick on WTI, but that also translates into higher uptick in another uptick in Brent. And globally, this is the kind of situation we have today. But I have to say that this is a smaller picture in the bigger scheme of things, where there are other worries such as potential sanctions and tariffs on Russia that President Trump already threatened to impose in case Russia does not come to the table and negotiate an end to the war in Ukraine, and how OPEC will react. And of course, there is an impact on economic growth and oil demand in the longer term. So it's a bit a murky situation at this stage, but we have distinguished between the immediate panicky impact and the long-term picture.
But Carol, so domestically, and you say we might see basically greater demand for some of the local supplies, you know, for the now more expensive alternatives. How long does that last? I know this all depends on tariffs and trade, but how much of a bump up could we see for WTI given all the other forces at play?
First of all, it's a kind of basic rule whereby the limited the alternatives are to the imports that are being subjected to higher tariffs, which translate into a higher cost. The limited options local producers are going to have, so they will end up facing a higher cost until they find another alternative. And here I'm talking about refiners in particular. So we have refiners in Midwest, which are hugely reliant on Canadian oil, will struggle to find an immediate replacement. And this is where we're going to see some of that cost, the increase in tariffs, being passed on to consumers. And that would translate with more expensive prices that consumers are going to pay at the pump. But ultimately, they are going to find alternatives, primarily with domestic production. How much will that last? It all depends on how long those tariffs are going to be in place. Is Canada going to enter into negotiation with President Trump? We don't know. But don't forget, this is a short-term picture, and prices in the global picture are determined by fundamentals of demand and supply. So there would be forces outside the U.S. that will dictate the direction of the market in the U.S.
So does it change the way OPEC Plus is thinking?
It is definitely something that they are considering and contemplating because it is an important variable. Now, it's not the tariffs by themselves because, economically speaking, this is like a one-off increase in the relative prices of certain goods. But the real risk for me is the trade wars, the retaliation. We saw how Canada was very swift in retaliating and responding to that increase in tariffs. And if we end up in this kind of spiral of tit-for-tat approach, that will lead us to trade wars that impose a serious risk on global oil markets through the negative impact on economic growth. And this is definitely something that OPEC Plus is contemplating, and particularly the OPEC and the OPEC Plus. And that might affect their decision depending on how market fundamentals will work out by April this year when they decided to put more barrels in the market.
Give us a sense of what kind of sanctions you're expecting the U.S. to put on Iran and Russia.
I think there is a greater probability of the U.S. toughening the imposition of its sanctions on Iran. It is primarily its main targets, even though we haven't heard much from President Trump in that respect when it comes to Iran. But remember, in his previous term, he imposed maximum pressure on Iran, and he managed to squeeze Iranian oil exports to 500,000 barrels a day at some point. But today, we're talking about Iranian exports have tripled since then, and with their main customer being China. On Russia, it's still not clear-cut. Like President Trump offered Russia an ultimatum: either come to the table and negotiate an end of the war in Ukraine, or you're going to face some very serious sanctions. And one can read the tariffs that he imposed on Saturday, that he announced on Saturday, as a message to countries such as Russia that I'm pretty serious with my threats. If you're not going to come to the negotiating table, these will be much tougher sanctions. And mind you, these would be imposed on top of what former President Biden imposed before he left the White House. So Russia would be squeezed, and it might be forced to come to the table and try to initiate the negotiations for to come out of the war in Ukraine.
Carol, thank you so much. Carol Nakhle, the founder and chief executive of Crystol Energy, with some of the, what could happen and the impact on oil markets from these new tariffs. Coming up, President Trump reiterates his threats to impose tariffs on the EU. What impact could this have on Europe's largest economy just weeks before Germans go to the polls? That's next, and this is Bloomberg. President Trump has reiterated his threats to impose tariffs on the EU, citing a large trade deficit with the bloc. Now, this just weeks ahead of Germany's election. Bloomberg's Oliver Crook is at Hapag-Lloyd headquarters, one of the world's biggest shipping companies in Hamburg, Germany's biggest trading port. So, Ollie, how seriously is the EU taking the threats, and what are the options to respond?
Yeah, I think the Europeans are taking this threat from Donald Trump very, very seriously, particularly in light of what we saw over the weekend. But even before that, the Europeans have had to have in their minds the reality that Trump is actually not sort of playing around now, that he really means it when it comes to these tariffs. For the most part, though, most of the leaders in Europe have been very reticent to say anything negative about Trump. They've really been sort of hopeful and praying. But at that point, it seems that that philosophy may have now been exhausted. And we do know that they have a list of their own sort of retaliatory measures that are ready to locked and loaded to go if and when these measures do come to Europe. We heard from Donald Trump they may come in the next few days, the next few weeks. We don't know for sure. So, we're here in Hamburg. This is the biggest trading port in Germany. This is where a huge amount of all of the trade that goes into Europe comes into. We're going to be speaking to the CEO very, very shortly about what this sort of means for the broader shipping volumes across the world. And we should also reiterate that the sort of trading relationship between the EU and the United States is 1.5 trillion euros. Right now, they're at about 3% tariffs. If that were to boost up a little bit more by, say, 10%, we're talking about potentially shaving off 1 percentage point of GDP growth in Europe here.
Yet another challenge for Germany as the election campaign drama intensifies. What's the latest?
Yeah, so listen, there was this sort of massive blunder from the CDU coming into Friday where we were talking about it, Francine, where basically they were joining for the first time the AfD, sort of rupturing the firewall in order to vote for this immigration reform, which didn't even pass Parliament because some of the CDU sort of voted against this or abstained from it. This is basically adding even more complexity, more chaos into the election process here, where it's really been very difficult for any of these parties to differentiate themselves. And the concern for the CDU, the front runners here, is that they may have actually jeopardized themselves, and we're still waiting to see that trickle through the polls.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, on Germany. Now, the German election's just a couple of weeks away. We'll have a special focus on how a new chancellor may navigate the trade and tariffs challenges. Oliver Crook will be live tomorrow from the port of Hamburg, speaking with guests, including the Hapag-Lloyd chief executive. Now, coming up, we'll have plenty more. Bloomberg Brief, Danny Berger and Manus Krani in New York, and this is Bloomberg.